Hello everyone, welcome back to Value Seekers. There is a lot of geopolitical tension around the world. First, it was the Ukraine Russia conflict, and now the Hamas Israel conflict is taking place, which has turned all the global markets on toes. Now, in this video, we'll try to find out the answer why the Indian market is still at all time high and what to expect moving forward amid all the geopolitical tensions, increase in inflation, high interest rates, and Fed speech. So let's get started. If you look at this chart of Nifty, it is still around right at top of its all-time high, around 19,500 mark. The all-time high was 20,000. Now, the simple and the effective answer to this mystery is I'll just quickly share on my screen here, which is the money supply. The money supply in US economy right now is close to 21 trillion. And if you look at the Indian economy, the money supply is around, I'll just pull up the chart in a moment here. Yes, so here it is. So money supply in Indian economy is also at all-time high. Now see this graph, right from 1972 till to 2023, we are approximately at 2 lakh 37,000 billion rupees as far as the money supply goes, and I will put that chart on the screen in a moment. Uh, Here it is. So 2,33,574 billion INR. That is the money supply, which is almost 11% up from last year. Now, this is, in my view, is primarily the reason why the markets continue to be so resilient and being at all-time high. The direct impact of the money supply here is that it provides money for capex, it provides money for the companies to expand and to boost their profits. Uh, it allows the company to uplift their prices if they have bargaining power. In turn, helps their price earning ratios and therefore leads to a high in their stock prices also, which is reflected in index levels as well. Now, it is a highly debatable question whether the US market or the Indian market will rise from here or will fall. I would strongly argue that this, despite this money supply, the although the central banks around the world would keep hiking interest rates and the inflation is high, if the velocity of money is high in the economy, just like you can see at in 2020, the money supply in US was $15 trillion, and now we're sitting at around $21 trillion, which means approximately 25% hike or more than 30% hike. So here also in India, we have been seeing hike in money supply here by around 11% from last year. And just to provide you uh, uh, interesting statistic, in 1952 in Indian economy, we just had 20.57 billion INRs, which has gone up by 11,355 times in 2023. Yes, you heard it right, 11,355 times. And here we are on this huge money supply Indian economy, 2,33,574 billion INR, which is definitely going to boost capex, going to help companies expand their operations, and going to boost their profitability and their stock prices. That is why I'm of the view that the markets would continue to be resilient because of the huge velocity of money which is available globally as well as in Indian market. And unless we see a drop in money supply, the markets are unlikely to fall and either stay the course on the upward trajectory, just like it has been right here, or there could be some consolidation at around higher levels, which would be time consolidation, or as they call it, time correction. But I I strongly believe that there is unlikely going to be any price correction in Indian economy or Indian market per se. So that was the view. Just wanted to share that with the viewers. I think it's important to understand the concept of money supply and how it impacts the global markets and Indian market. Uh, Please, as always, take your advice from the financial advisor before taking any buy or sell decision. Thank you so much for watching. Consider subscribing and liking the video. Thanks for your time.